Ladies and gentlemen, the moment that I've been warning about and the moment that we have all been waiting for has come today. Just after Evergrande defaulted last week, now we've just got some new huge data. A record amount of Chinese developers and companies have defaulted this month in December. That's right, not just a little bit, not just a little bit more than usual, the most ever in 1 month. And what have we been talking about on the channel, everyone? We've been talking about how Evergrande, that is just the first domino to fall. And I've been warning about contagion. Contagion is when one financial institution goes down, especially something that's huge to the financial system, kind of like when Lehman and AIG went down during the global financial crisis in 2008. This causes ripple effects throughout the whole global markets. And this is now what's happening to China, but there's also some huge risks that are happening, which I'll get into later in the video, in the US, in the whole global economy as a whole. As I'm recording this, the global markets are in meltdown. We got the DAX down 2.82%, the FTSE down 2.15%, CAC 2.52%, FTSE MIB 2.88%, and the Stock 600 2.3%. The European markets are plunging as the Omicron worries intensify. We'll have a quick look at the Asia markets. The Asia Pacific stocks drop as China cuts its benchmark lending rate for the first time since 2020. So the China central bank is starting to panic. They see the risks that are building up and they're now starting to act. We can see the Nikkei fell 2.13%, Shanghai down 1.07%, HSI, the Hong Kong Stock Exchange, is down 1.93% and is now in a huge bear market, falling from 31,000 now down to 22,000, nearly a 30% drop. But where most of my viewers are from, the US, you're probably wanting to know what's happening in the US markets today. Well, I'm looking at the futures here and they're not looking good. The Dow is down over 600 points, down 1.71%. The S&P 500 is down 1.75%, and the Nasdaq heavy tech sector is down 1.72%. But look at oil. Oil is absolutely plunging, down 5.6%. And what are we seeing, everyone? We're seeing a flight to safety. We're seeing the stock sell off, but we're seeing people head to bonds. And the US Treasury yields are following because people are buying up bonds, and then that makes the yields on those bonds go down. The global markets reacting to this news and also some other news I'm about to get into. So let's have a look at this article of what is happening in China right now, because the collapse has only just begun. And as we can see, it is getting worse by the day. So look at this, everybody. China's offshore bond defaults hit a record in December. It says here, December is poised to be a record month for Chinese offshore corporate defaults after missed payments by indebted companies, including China's Evergrande Group and Caixa Group Holdings Ltd. Chinese firms have defaulted on a record 3.8 billion in offshore bonds so far this month, data compiled by Bloomberg show. The previous monthly high was in January, and that was when Chinese borrowers failed to repay just 2.7 billion. So we can see this is nearly 50% higher than this, and the defaults and the debt is mounting up and is accelerating at a rapid pace. A month that saw Evergrande and Caixa officially labeled defaulters, December has seen a precautious rally in Chinese junk bonds, threatened by heightened anxiety over the financial health of other companies such as Jingmao Group Holdings Ltd and Guangzhou, I think that's how you pronounce it, RNF Properties Co., as a liquidity crisis sparked by a government crackdown on excessive borrowing by developers ripples through the sector. But that's not all, everyone. This year has seen Chinese borrowers default on a huge 13.3 billion on offshore bonds, with real estate firms making up half of the total. And what have I been talking about, everybody? I've been talking about the junk bonds market in China, with the yields going to absolutely crazy levels, 25%. There is no way these companies are going to be able to afford these higher interest costs. And this is going to cause a tsunami of more defaults to come, just like I've been warning. A record pace of defaults and downgrades for Chinese borrowers has recently sent junk dollar bond yields to a record high. Such surging borrowing costs have shut down offshore refinancing channels for Chinese firms. An HSBC report last week said such funding will only reopen to the highest quality Chinese property developers in the second half of 2022. Wow, everyone, this is huge, and you really have to understand the risks. The signs are everywhere, people. I've been warning about this, and people just saying, oh, it's just being all doom and gloom, fear mongering. People, I was just reporting the facts, and I was just reporting the truth, but maybe you can handle the truth. We're seeing major banks like HSBC completely cutting off funding to this sector. Why do you think they're doing this? Because it is literally collapsing before our eyes. It is no mystery now, everyone. And they know that things are only going to get worse in the first half of 2022. Because also look at this, everyone. Chinese estate plunges by record after privatization collapses. Shareholders rejected offer by long-term ally of Evergrande, and Hong Kong firm has been reducing its stake in Evergrande. So as we can look at this chart here, they tried to go private at $4 a share, and buyers rejected the offer at around $2.60. Again, everybody, look at this chart of the Hong Kong Stock Exchange. It has fallen from 31,000 down to 22,700. It is already in a bear market. It is already crashing. Can you see that the markets are already pricing in this collapse in China? But what you're probably wondering, okay, I can see things are pretty bad right now, but is the worst over? Or is this just beginning, and is there more pain to come? Well, everyone, what I'm seeing in the markets right now is really a perfect storm for a global market sell-off that is happening right now. And I'll give you facts and reasons why. What are we seeing that's happening right now, and what's causing a lot of fear in the markets? Well, we saw a huge stock market crash in 2020 of around 35 to 40% in most markets because of the pandemic. Then they printed heaps of money, they lowered interest rates to zero, and we thought everything was good. We spent trillions and trillions of dollars to just recover. But what is happening now? It seems like just when we thought the pandemic was over, it seemed like it is getting worse. In some countries like Europe, they're reimposing restrictions, and this is causing investors to worry. Now, I'm not going to get into the political side or the health side of these things. I'm not a politician, I'm not a doctor. I'm just specifically going to talk about the economics of this. They've spent trillions and trillions of dollars just to try to get us back to normal when we're not back at normal. And the thing I keep thinking about is, how could they shut the global economy down or have it running at 25-50% capacity for a year and a half to 2 years without any consequences? Well, I think simply there can't be no consequences. There has to be consequences for what's been done. And what I think the markets are worried about is a lot of governments have already used huge amounts of stimulus. We've just heard that Joe Manchin is shutting down Joe Biden's stimulus package of around 1.7 trillion. So that was going to provide a lot more stimulus and print a lot more money and give a lot more incentive for investors to invest in, just because money printer go brr, got to put my money in the markets. Well, now that's being taken away. Investors all of a sudden like, well, maybe the money printer's going off. Maybe this time the Federal Reserve isn't going to be there to save the day, because remember, every time the market tried to correct in 2020 and 2021, the Federal Reserve would turn the money printer up and he'll come and talk up the markets, drop interest rates lower, and everything will seem good. But now we've got record inflation, and really the inflation is much worse than their reporting of 6.8%. Again, I keep saying they changed the way they report CPI so they can cover up the money printing they're doing. But we all know inflation is at least double digits, and Shadow Stats has it at least 15% as the rate they used to record it at in the 80s. So what this simply means is, if we do have another stock market crash, like I've been warning about, the central banks aren't going to have any tools really to fix it. And if they do, this inflation problem that we have, if they do try to fight this next market crash or this next market recession by printing hundreds of billions every month, or even what they may have to do is start printing trillions of dollars every month. Because remember, every time there's a recession, they have to print 10 times the amount of money as they did the last recession, because there's something called the law of diminishing returns. During this financial crisis, they printed 120 billion every month. Well, during the next crash, if they just do that, well, then that's just the same as they're doing before. So investors are going to say that's not good enough. We want more. But again, they can't do that when inflation is this high, because that will just really kill the currency and send this high inflation that we have right now into borderline hyperinflation, kind of like what we're seeing in Turkey and Argentina right now. And we just really hope it doesn't get into Zimbabwe levels where we start printing $100 trillion notes. And remember, everybody, we haven't had a 10% correction in the stock market for over 18 months. That is something unheard of. Normally, there's at least a 10% correction every 12 to 18 months. But since 2020, we've just been on a straight moon rocket ship ride to the top. And this just may be a good time for investors to take some profits and take some off the table, because they used to say, look, don't fight the Fed, just go along with it. Well, what happens when the Fed comes to fight the markets? And with interest rates likely to go up in 2022, we're not going to see this ultra loose monetary policy anymore and this easy free money. But again, going back to China, everyone, like I've been warning about, the housing bubble is absolutely off the charts. $62 trillion. This is absolutely insane. Imagine if the housing market there falls just by 20%. That's $12 trillion of wealth wiped out like that. And remember, in China, real estate makes up to 30% of GDP, and households have up to 70% of their wealth in real estate. And China has been the powerhouse for global growth over the past 10 years. Well, they go down, and Goldman Sachs has been slashing the growth forecast for the US in 2022. And we start to see more and more companies in China default, and this spreads too. And we start to see more and more Chinese companies and developers default, and this starts to spread to the Chinese financial system, and then that starts to leak out to the global financial system. We could really see a GFC 2.0 in 2022. So everyone, while it seemed like over the past 18 months, nothing can stop this bull market rally, remember, things in the markets can change very quick. So it may be wise to maybe take some profits, not financial advice, but just what I would do, take some profits, start building a cash pile, like I said, to buy the real dip. None of these, 1, 2, 5% dips, like these people saying, oh, look, it's down 2%, you got to just go all in. That is nothing, people. And remember, we haven't had a big correction in a long, long time. So if a 20 or 30%, dip, that's a real dip, comes along, well, then I would be buying those dips. And that's when you can get the real big gains, not just by buying these little baby dips like we're seeing today. But everyone, that's just some of my thoughts and opinions, what's going on in the markets right now, some news and some facts for you to seriously think about and consider. What do you think? Let me know. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you in the next video.